What is up, guys? It's your boy No Risk, No Premium, back with another episode of it is Sunday sermon on a Saturday. Wow, I'm all fucked up. My apologies right out the gate. Might have to scrap this one. Nope. We're gonna roll. We're gonna roll with the punches. Look, it is Saturday. We're doing the Sunday sermon. My name is No Risk, No Premium, and it is not the 2-minute drill. However, the reason we are doing the Sunday sermon on a Saturday is because I will be traveling this week, guys. I'll be flying all Sunday, so I cannot do it on Sunday. So I'm getting it out to you today. However, we will not launch it until tomorrow. Okie dokie. But do not fear, because I have an awesome mobile setup. I'll be trading mobile. I'll still be getting you guys the 2-minute drills throughout the week. So do not fear. No Risky will be here with the 2-minute drills for you this week. Now, very interesting week this week. Check out this weekly chart here. Ugly wick to the top candle. We respected the 200 weekly moving average. We were screaming it since last Sunday. We were screaming it since the Friday when we got down there. We said, you must respect the MA. You must respect the double bottom, because if you don't respect the double bottom, you don't respect your own bottom. And you got completely torn to fucking shreds if you didn't. Okay. We bounced 20 off the bottom in 2 days. We got 5% back in 2 days. The S&P 500 gives 10% on the year. We got it in 2 days. Half of it in 2 days. Insane. Okay, insane. Now, I do want to point this out. Something interesting here. I don't know what you want to call this hammer or this candle. Someone called it an inverted hammer. Okay. It's a little too wicked to the bottom for me, but those that, are this huge candlestick people, inverted hammer is a sign of a bullish reversal. I'm not saying we reverse, but I'm just saying that's what it looks like here. Okay. That's what it looks like. So possible, I don't know, have a nice gap to fill down here from the weekly low. However, this week, what should we expect for this week? Okay. Well, this is the chart. Let's go to some economic data. Okay, I think that'll be a good place to start. What do we have coming this week? All right. FOMC minutes, guys. The minutes is not the meeting. The minutes is the notes of the meeting prior. Okay. But then we have this guy right here. Oop, this guy right here. Core CPI. Okay. Consumer price index year over year, month over month, et cetera, et cetera, et cetera. Why is that important? I'll scream it from the fucking rooftops every goddamn time we have it. It's because the Fed looks at inflation and they look at the jobs market. If they look at those two things, if there's anything that has to do with that data, do you think it's a good idea to be paying the fuck attention? Yes, it is. Okay. So I'll just tell you this. Energy prices are up, commodities are up, and gas is up. I do not expect the core CPI to be down. I do not expect it to be under expectation. However, I truly don't really give a fuck what it comes in at, and neither should you. You should just give a fuck how the market reacts to it. Okay, so those are the two big things this year. This week coming up: FOMC minutes, jobs numbers, and consumer price index. Retail sales on Friday will be interesting. I want to see what the 5-year expectation of the University of Michigan expectation is as well. That comes into the market open. Always some fun action there. Okay, as far as this week goes, are we getting any of these guys to come fuck our day up? We got Brainerd, whatever, on Friday. So it's Friday. Wow. Monday. Who is this? Bar. I don't know who this is. Whatever. FOMC is a really important one. Yes, that's all we really have. So no Fed speakers have popped up. Now, this week for earnings, interesting earnings week. It's all the banks. The big money banks, JP Morgan and Chase, Morgan Stanley, Citigroup. I think B of A might be in there as well. So if you guys are playing any earnings this week, it'll be good to watch the banks. And if you think rate hikes are bullish for banks, you need to rethink your mindset. That I will not tell you exactly why. It was a very simple contract or concept. You can go to this website called www.google.com and figure it out for yourself. But I'll tell you this, it is not bullish. Rate hikes are not bullish for banks. Okie dokie. Now, you'll want to watch the bank sympathy play there is XLF. It is the Banks ETF, XLF. Okay. Don't get clapped on the IV if you're playing earnings on the Banks. Just play XLF. Very great sympathy play. Okay. Other than that, I think the following week is like Tesla, Netflix, Delta's this week. What was this? United? Yeah. PepsiCo this week. Yeah, but so you'll want to watch the Banks this week. Next week we have Tesla and Netflix. XLF, you're going to play the Banks, guys. Okay, back to the charts. Back to the charts, guys. This is going to be a short, simple, sweet, and to the point video. Okay, because this is a really simple concept to grasp. Okay, what happened this week from last week? Last week we were in this range. Okay, we were in this range, guys. And you know what it means when you're in a range? Okay, when you're in a range, you identify the range and you take calls off the support and puts off the resistance. And you do that until that range breaks. And then you have what's called trending. Okay. Well, look, Jesus Christ, I apologize. Look, what did we do last week? We ranged all week long. It's very tough trading if all you want to do is play a breakout. But if the market ranges the majority of the time, why wouldn't you be playing the support range and of the bottom and the support resistance? I mean, the range top at resistance and play puts there. It's simple. Fake breakdown off the 200 weekly moving average. And then we went Ripper McGee. What did we do though? We went from one range here. Okay. To another range here. You guys all see this? You guys see this, right? So you had an opportunity to play a huge run up and then a range here. Okay. And then we said all week long, 370s, the macro pivot for this week. And then on the Thursday 2-minute drill, we said, do we get the breakthrough to the downside 370? We did. In the morning, we back tested 370. That's when we took puts as a group. And we rode that fat ass slow donkey all the way down. Very slow, methodical sell on Friday with a vicious bounce. Where did we bounce, guys? The weekly open. That's why you mark your previous week's highs, lows, open and close, and your previous day's highs, lows, open and close every single time. And you know where those levels are, because if you were, you would have knew to be out of puts at that level and possibly look into the call side. Okay. But look, really ugly daily candle down. Not good. What I think happens this week is this, guys. Obviously, we have a major rejection here. And we didn't get to it quickly, but we got up there. We did reject the 20-day moving average. I thought we would get into it a little bit. I think I was mentioning that on 2-minute drills. I was saying, hey, look, I wouldn't be surprised if we try to get up 380, 381, like really into it, maybe draw some people off sides and reject. We ended up just not being able to get through. Right? We just couldn't get through 378, right? Couldn't get through 378. And that's okay. We came down. So what do we do now? Well, if we know we've got FOMC minutes, right, on Wednesday, and we've got core CPI on Thursday, what does the market like to do into major catalyst events? It likes to what? Range. So if we're gonna range, we just got back in another range here. So now we still are in 362 to 370. And if we get over 370, we're going to just jump back into this other range, which is 370 to 378. Okay. So know that for this week coming up. This is a pretty straightforward week. We're in that we jumped out of one range, trended only for a day or two, and then we got into a range up here. Now we're back down in this range down here. Okay. So until 360 breaks, I mean, we have 362 on the close, but you need 360 to break or you need 370 to break. Now, that's a 10-point range. That's a huge range to trade. And if you trade it right, you can trade it very simply and make a lot of money. Okay. You take calls off support and puts off resistance until that trend is broken. And when you're in a range, what they try to do is give you a fake breakdown with these wicks, right? Oh my God, we're breaking up, right? Oh my God, we're breaking up. We close that resistance, gap down. Okay. Oh my God, we're getting through 378, gap down, right? Oh, we're going to go down through 370 or 372. That guy on YouTube that yells all the time to only gap up, right? Do you guys see that? So in a range, they try to catch you off sides. If you're too worried about getting rug pulled, you're not listening and you're not studying. If the market trends consolidates 3/4 of the times, that means it's in a range. It's coiling up. Okay. It's trappy, whatever you want to call it. If it does that, I say 3/4 of the time, and in the other quarter of the time it trends, then why wouldn't you be taking puts off resistance and calls off support every single goddamn time? You would only get rugged one time. That's 3 out of 4 trades. That's a 75% win rate. Okay. Same thing here. You could have done one trade off resistance, one trade off support. That's 2 trades. 3. This is off resistance, off support, off resistance, off support, off resistance, off support. Okay. You had 10 trades to make here before you got rugged on your 11th trade. Do you guys understand this? Okay. I need everybody to understand this. Right? Now, if that's the case and we range into CPI FOMC, which is very possible, I would say we stay between 370, 360, 370. 370 is still that pivot. Above 370, we go right to 378, right? Now, what happens if we don't respect this range? Okay. Which on Monday is probably a good idea if you're just risk off and allow the market to see, do we hold this 360 overnight? Okay. And in the morning, do we test it or break it or do we not? That'd be good to see. Underneath the 200-day moving average on the weekly, though, if we get underneath it, okay, if we get underneath this, I almost am guarantee we will magnet to 350. And why would we go down there? If you look at the monthly chart and you go down here and you look at that purple dotted line and you see where it's at, 352 now. It's at 352. Okay. So excuse me, 352. So monthly 50 MA. Okay. Very possible we get there. A 50% retrace COVID low to high. Okay. We see this would be where? 350, right below it. So I would say anywhere from 349 to 352 would be the low if we break and hold underneath 358. So weekly 200 MA. Okay. Now, if we continue to hold that, we will stay in the range between 360, okay, and 370. And until we break out of that range, if we go to the upside, we just get into another range, okay? But if we have the data, okay, we have catalysts, we call them, that could break us out of this range, just like the non-farm payroll numbers did right here. It just broke us into another range, unfortunately, all right? So what does CPI and what does FOMC data do for us this week? I have no idea. We'll have to wait and watch the reaction. I don't really care what the minutes say. I don't care what the print is because you could say, oh, it's going to be hot. It's going to be this. They're not going to rate hike. They're going to rate hike. I don't give a fuck about saying what could happen. That doesn't make you money. If CPI comes in at 50 fucking percent and we go to 400, did you make money on the way up? That's all I care about. Do you want to be right or do you want to make money? Okay. I'm going to choose making money every time. I don't care what should be going on. Inflation's 40-year high. Consumer credit is absolutely insane. The dollar is up. The central banks in Europe are fucking going to collapse. The market shouldn't even open. If it's all this bear fucking news and bear porn everywhere and oh my God, then the market shouldn't even be open, right? It should be at 0. SPY should be at 0. Don't get caught up with what everyone has to say is quantitative tightening and Fed. I don't give a fuck. Play your levels. Play your goddamn levels every day, and you will be fine. Stop worrying about the noise. Okay. Yes, the economy's bad. Yes, we're in a textbook definition. All this shit, we should fucking be way lower than this then. I don't care what any of that shit is. Just play your goddamn levels. Okay. So I'm going to say the levels one last time and we're going to end it there. And that's all you have to worry about for this week. Okay. 360 to 370 is the range. The up top range is 370 to 378. Okay. If we get into those ranges, respect those ranges. Okay. Until we break and hold out of them like a daily candle close out of those ranges. Okay. You have to respect them. Okay. Pay attention to the core CPI and the FOMC this week. Okay. Underneath 358, 352, 350, 349. Okay. Above 370. Okay. Above 370. Okay. Above 362 will be 366, 370, 372, 378, 380, 382, 390. Okay, below 362, 360, 358, 352, 350. Okay, if we get really, really bad, okay, really bad, like way underneath 350 this week, which is possible. Okay. I would 100% be targeting this blue dotted line, yellow dotted line, 338. Okay, guys, just want to get this to you short, sweet, simple, to the point. I'll have the 2-minute drills out every day this week. Okay, get your homework right. Okay, wake up early every day. Mark your previous week high and low, open and close. Previous day high and low, open and close. Okay, and try not to do anything fucking stupid. Hope you guys have a great weekend. I'll see you guys bright and early in the pre-market Monday. Peace.